John Schubert, Chairman of Commonwealth Bank in Australia, thanks for joining us on INSEAD Knowledge. It's a difficult time for the banking sector generally. How are Australia's Big Four banks holding up?
Australia's Big Four banks are actually holding up very well. We were not directly exposed to subprime and some of the CDO problems, especially the Commonwealth Bank. I know over the last, at least 3 years, there were numerous occasions when we looked at something and said, there's no pricing for risk here and we shouldn't be part of this. This will come back and really hurt if we take out that particular investment. And so we didn't, and it's held us in very good stead.
But are the banks in Australia relatively unscathed because of the fact that you went through a crisis in the early 90s and had to work through those problems?
It was the early 90s. I think that's probably too long to say that was the reason. I think we've got a situation where we have had pretty good risk management. I think we have good regulation in Australia, but I really can't speak for the other banks. And we're probably the least exposed and have the strongest capital position of the Big Four. But the Big Four banks in Australia are all AA rated, and actually we have 4 of about 15 AA rated banks in the world in Australia.
As you say, you can only speak for Commonwealth Bank, but ANZ and NAB have already had to make some write-downs, provisions for bad debts. Are you also going to have to make provisions in the same way?
Well, our provisioning has gone up a little bit just with the turn of the cycle, and we've had some exposures to some major corporations that have got into trouble. I think that's where probably all banks will start to see things happening, is we will see some corporations around the world not able to keep the same level of meeting their covenants as they have in the past. So I think there's going to be some bad debts associated with some major corporations. I'm not forecasting any specifically, but I just think with this cycle that's coming up, I think we are going to see a significant downturn around the world, and with that will come some bad debts. But I think we're going to be better off than almost anyone. We have a very strong capital position, the strongest capitalised bank in Australia. And of course, just recently we were able to make a major acquisition and then go to the market and raise $2 billion in equity in a single day. So I think that's indication of the strength of the Commonwealth Bank.
You mentioned there your acquisition. You're buying Bankwest from HBOS, and Westpac is buying St George. We're seeing consolidation. That means decreased competition, though. That's bad news, isn't it, for consumers? Well, that's what the press tend to say. I would suggest to you that if you've got 4 strong, well-capitalised banks in a given market, that's a lot of competition. You had 4 chemists or 4 newsagents in a given area, you'd say there's tremendous competition. In fact, if you're one of those, you'd say there's too much. So I think 4 large, well-capitalised, strong banks is lots of competition, and there'll always be niche players chipping away at us if our margins are too large anywhere. So you're saying that yes, the industry is consolidating, but that's not going to have a major impact on consumers?
I don't think it will.
Choice in terms
I think
banking.
the major impact on consumers is that funding costs everywhere are much higher for banks, and therefore we have to pass that on, especially in this environment, pass that on to consumers. But interest rates are falling, so they're offsetting that increase in funding costs, but it does mean that the bank's ability to lower interest rates is limited until actual funding costs reduce also.
Do you think that the Reserve Bank is heading in the right direction with lowering interest rates at the moment?
I think that's been a very good move. I think the large interest rate fall that they engineered about 2 weeks ago was just right. I think they'll be looking at seeing whether they go further over the next number of months, and certainly the markets would indicate they think that's going to happen.
Well, you think the economy needs rate cuts in order to keep the economy ticking over?
I think that, as I see it at the moment, I think that's the case. I mean, you need the latest data to make those decisions, obviously, but the economy is slowing, there's no question. The Australian economy is doing better than almost any other Western economy, but it is slowing. I know, for example, that around Australia restaurant trade is off 15 to 20%. And I'm sure that that sort of number would be exactly the same in many, many small businesses. People are uncertain and they're reducing their discretionary expenditures. That will slow the economy. Unfortunately, it will mean some job losses along the way, and we'll see unemployment, I think, unfortunately rise above where it is at relatively low levels today. And that will then trigger further cutbacks, and so it goes on. So I think we are going to see reduced growth in Australia, and that's going to affect every business.
And Commonwealth has just announced that you're going to be cutting back something like to make savings of 370 million Australian dollars. Job cuts presumably are going to be part and parcel of that.
Well, you're always looking at getting more efficient. We have some large programs on the IT side going forward, a core systems replacement, which is a massive expenditure and activity within a bank. We're fairly well into that now, and inevitably those are efficiencies that you gain. But yes, we're always looking at cutting costs. Having the lowest cost is just the ticket to stay in business. If you don't have the lowest cost in your industry, then you're vulnerable.
But you're looking to save something like 5% across the board.
I think those sorts of numbers are always available to you. It really doesn't matter whether you're in an upswing or a downswing. You have to be looking at becoming more efficient.
Are you expecting your earnings to fall over the next, say, year? Because we're already seeing other banks being hit like that.
Well, we don't make earnings forecasts. My experience is that's something you never want to do, so we haven't. What we've continued to say is that we expect our earnings will be above the average of our peers.
What about the Australian dollar? Have you been surprised by the way it has slumped recently?
Yes, I was surprised by that. I wasn't expecting that sort of fall. I didn't think it could keep going up. I thought it would come back, but I didn't expect it to come back that far.
What do you see as being the outlook now for the Aussie dollar?
I've been completely unsuccessful in forecasting exchange rates, and I'm not about to start forecasting them now.
If we could just go back to the position that Australia's banks are in, such as your own, it seems as though you're fairly well insulated from the problems that are going on elsewhere. Is that a correct perception?
Well, I think we kept out of the subprime debacle. A lot of the collateralised debt obligations, we kept out of that. We are obviously completely exposed to increased funding costs, and when that dries up, as it tended to for some short periods over the last 6 months now, then that affects us to some extent. But being AA rated, having a very good capital position, puts us in as good a shape as any bank in the world in getting funding and getting relatively good prices for it. So to that extent we've been insulated, but that's still being exposed.
Could this be an opportunity for Australian banks? I suppose it would involve some sort of aggressive expansion beyond Australia's shores, which so far the banks haven't really done.
Well, we're not going to make the mistake of moving beyond our strategy. We do see this as a time of opportunity, and I think we've already seized one of those with the acquisition of Bank West a few weeks back at, quite frankly, distressed prices. And we'll be looking for more opportunities of that type if they come up, but we will only make acquisitions if it's at the right price and if it's on our strategy. We won't step outside either of those two absolute disciplines.
Do you think the economic downturn could get dramatically worse? There has been talk about a possible rerun of the Great Depression.
I think we're going to see the real economy, if you like, really hard hit, certainly in the Western countries. I think that's inevitable now. We're already seeing the first signs in virtually every country of the West. We're going to see China slow. It's going to probably slow from what was somewhere around 12% GDP growth to probably something around 7% GDP growth. That's going to have a massive impact. That's a long way from where it was. India's going to slow as well. So some of the growth engines are going to slow. They're not going to stop. and they're going to still take lots of commodities, and they're going to increase the volume of commodities that they need. They just won't take the increased rate to the same extent as they have over the last few years. But I do think we are going to be in tough times for the next 18 months at least.
You're linked to some of the Australian icons. You're on the board of Qantas, you're on the board of BHP, you're chairman of Commonwealth Bank. From your perspective, are you confident we're going to get through this?
I'm confident we're going to get through it, yes. I think it's going to be tough for a period of time. When things are going down, it looks like they're never going to come back up again. And unfortunately vice versa, and that's the mistake the world made over the last about 10 years. But yes, cycles haven't finished. We're in a very severe downturn cycle at the moment that will run for some time longer, but we will recover.
Well, John Schubert, thanks for joining us on INSEAD Knowledge and sharing your views on the financial crisis and the economic downturn.